Let's start with the Jackson Hole Symposium and what we could expect later this week. Obviously, the Fed targeting this average inflation move going forward. Do you expect continued dovish remarks?
Oh, absolutely. And I think that's why the stock market continues to move higher. We have a lot of uncertainty with regards to who's going to be the next president. But for a while longer here, we're certainly going to have Fed Chair Powell running things. And there's every expectation that he'll give a very important speech on Thursday. And in that speech, he'll announce that the Fed now wants to target average inflation, which means that it's been running below 2%, which has been their kind of ceiling target. And they haven't been able to get it to 2%, but now they're saying they wouldn't mind if it's above 2% for a while, kind of a makeup strategy, if you will.
And Edward, we've had some interesting US economic data out in the last week or so. We've had pretty strong home building numbers, but then some pretty shaky, nascent, slow recovery in the jobs market. You are still targeting that real GDP will fully recover by all that's lost during the great virus crisis, as you call it, the GVC, by the second half of 2022. What's underpinning that at the moment?
Well, that's actually an average sort of recovery from a recession. It's not really a V shape. It's V shaped now, but it kind of swooshes like the Nike swoosh logo, if you will. But look, some of the indicators of late have actually been very strong, really, in housing. And housing matters a lot. New home sales, existing home sales have all been very strong, and they all have knock-on effects on all sorts of retail sales. And retail sales are all-time record high here. They're all-time record high in Europe. So all in all, we're still seeing that the economies are recovering pretty well from what was basically a lockdown recession.
Oh, yes, indeed. Edward, good morning. Thank you for joining in this conversation. How are you preparing for the election risk as somebody who watches the markets very closely? What do you make of it?
Well, I think there's a widespread view that if the Democrats sweep, if they get the White House, they keep the House of Representatives, and they get the Senate, that might be bearish for the stock market, that we'd have a radical regime change, if you will. Suddenly we'd be looking at more regulation, higher personal taxes, even wealth taxes perhaps, and certainly a higher corporate tax rate. But none of those things are going to happen overnight, and it's not guaranteed that they're going to get the Senate or even the White House. We'll have to see how it all plays out. I don't think the market's going to be discounting what's going to happen on November 3rd until it'll actually happen. And then we're all going to be scrambling to make our decisions, whether it was a radical enough change that requires us to either get out of the market or just stay with it for a further ride to the upside. Politics matters. Who the next president will matter. But so does the entire kind of checks and balance system that we have in our government. And for the stock market, most important is what the Fed is all about. And the Fed is certainly going to signal that they're going to continue to provide us with lots of liquidity.